Matt Grain, good to have you here, friend. What are the markets doing to us today? My gosh, Matt, this has been difficult, challenging times.
Yeah, and it was really crazy overnight because the overnight screens on MBS Live and elsewhere showed 10-year Treasury yields going as high as 4.415. And a lot of
Whew.
people that watched the market late at night here last night were freaking out. But that
Yeah.
was a product of the over-the-counter nature of bond trading and the fact that there was some rogue dealer out there who was entering bids and making a market in Tokyo hours when Tokyo was closed for holiday. So normally you'd have enough participation in the market. That sort of thing would immediately become obvious and get corrected. But in this case, somebody had not remembered to carry the one in their pricing algorithm and just set it to automatically drone along for the first few hours of the overnight session. And then you can see it corrected immediately back down to 4.31, which in my view is not really any better than 4.41, but at least it's relatively better. Anyway, that's neither here nor there. It's not market related. It's just a little
Well,
trivia
it's a
anecdote.
good data point, though. I mean, it really is a good data point. And based on where that even 4.31,
That's where
when,
we're at
okay,
right now.
okay, so going back in time, I was looking at the historical charts on the 10-year on your screens. And when were we at these levels last? Is it going?
2007.
Okay, so I was looking at that right. It was 2007 is where we were at these levels. My, my, oh, my, oh, my.
Yep.
Yeah.
Yep.
So,
Definitely exciting times if you want to use a more positive word for what's going on with rates. And it'll change at some point. We just don't know when. And a lot of it has to do with the economic data and the Fed's interpretation of that data. And there's a lot of disagreement about that. But last week's big to do was CPI, the Consumer Price Index. And there was a lot riding on this one because it was in close proximity to this week's Fed announcement. It came in a little bit hotter than expected at the core level, zero point 0.3 versus zero point 0.2. And initially that caused bonds to pop toward higher rates for a few minutes. But somewhat miraculously, they recovered and ended up actually holding their ground on that particular day. And that was a surprise. And people wanted to know why. I actually wanted to know why. And actually had a good conversation with the MBA's Mike Fratantoni. And we talked about the fact that I may scrutinize the data more closely than some people that are actually making trading decisions on it. I'm not talking about traders at trading desks so much as investors that are turning on the news and seeing that the 3-month annualized inflation reading is back in line with the Fed's target. And the Wall Street Journal put out an article to that effect and a tweet to that effect. And we could well imagine that even though we're watching little nitty gritty components in the month over month data, other investors are seeing that this 3-month annualized number is back in line with the Fed's target and saying, okay, inflation really is calming down. I'm going to buy some bonds. And that also goes hand in hand with the pop or a friendly rally that we got at 9:30 a.m., indicating that ETF bond buying could be a factor on that day. But things fell apart on Friday afternoon, and bonds ended up at the high yields of the week. And there again, not any fantastic reason for that. Everything is leading up to this week's Fed announcement, and the dot plot comes out, and we also have a press conference as always. But the dot plot should be particularly interesting, and that's the Fed's economic projections, wherein each Fed member gives their assessment of where the Fed funds rate will be at a particular point in the future. It's represented in a chart with a dot for each individual rate, thus the name dot plot. And although Powell tells the market, hey, this isn't really as important as you think it is, the market continues to trade it as if it is very important. And I was reminding my audience last week, the Fed can't dictate how the economic data comes in. They can only react to it, but their reaction function is nonetheless important to the market. So while economic data itself will determine where rates end up going, the Fed is now in a position to comment yet again, and perhaps more forcefully, on whether or not they are intending to use holding rates at the ceiling as a policy tool, or if they are thinking, gosh, the data last week was actually pretty good and we might need to hike again. And yeah, I guess I forgot to mention last week's data, like Thursday, for instance, across the board was quite a bit stronger than expected. Jobless claims were only slightly stronger than expected, but producer prices 0.7 versus 0.4, retail sales 0.6 versus 0.2, optimistic numbers for the economy, and the kind of numbers that still show a surprising amount of resilience for those that are wondering where this recession is that everybody had been talking about. We'll get to see how the Fed wants to address that on Wednesday. Definitely volatility potential surrounding Wednesday afternoon. Other than that, this week doesn't have a ton of big ticket market movers. Maybe Philly Fed can sometimes be a market mover on Thursday morning. And jobless claims, of course, every Thursday is worth considering when we're looking for a shift in the labor market. Other than that, just trying to defend that ceiling at 4.34 and 10-year yields. And that if that can hold up, that's better than a sharp stick in the eye.
Yeah. Because it will be a sharp stick in the eye if we go above it. We pierce that ceiling, and we start heading into a new trading range. Who knows? Who doth know where we go from there? But at this point, doesn't look like that. Feeling better about it as we look at the market.
Yeah. So far, so good this week. It should be the path of least resistance between here and Wednesday is just sideways and waiting for the Fed.
Yeah. The big Fed news will be, again, what day is that?
Wednesday afternoon, starts at 2 p.m.
All right.
Eastern time.
And it will be featured on mbslive.net. Get all the results and everything right there. Anything else for us today?
No, I think that's it. All I can think about is the Fed. Yeah.
All I got on my mind is the Fed. I'm trying to think about all I want for Christmas is, oh, I know what I want for Christmas, lower rates, and then think my mind. Yeah, there we go. We start doing some songs with that, man. That'll lose some listeners fast. Anyway, Matt Graham, thanks so much for being here with us. Really appreciate it. Folks, you can sign up for the best service on what's happening with rates up to the nanosecond. That's mbslive.net. You can sign up with the code LOL to get an extended trial period without having to put in a credit card number. But pull your credit card out, just sign up. It's affordable and you can't not live without it in these times. So anyway, Matt Graham, have a great rest of your week. Appreciate you so much. Thanks for being here.
You too. Thanks, Dave.
You bet.